Jared Dillian. Own your money, own your life.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. Nobody knows what their taxes are, which is kind of crazy. Like, if I asked 100 people and I said, what is your marginal income tax rate? I might go 0 for 100 as to what people think their taxes are. People have no idea what their taxes are, which is nuts. I mean, so a lot of people do the TurboTax thing, and it just spits out a number, and they get a refund, and the refund is all they care about. They say, well, my tax is, this is what I get for a refund. That's all they know about taxes. And then you have people who like have an accountant, and the accountant does everything, and the accountant spits out a number and says, this is what you're getting for a refund. And this is all that people know about their taxes is what they're getting for refunds. We saw this in 2017 when Trump passed the Tax Reform Act. And what ended up happening in the Treasury Department was that they changed the withholding tables so people had less money withheld out of their paychecks. And they ended up getting smaller refunds, and people's assumption was that their taxes went up because they got smaller refunds, but in reality their taxes went down. But they didn't notice it because the differences in their paychecks were smaller than the refund, the difference in the refund at the end. So they thought their taxes went up, which was crazy. And they were calling it, on Twitter, they were calling it like the Trump tax hike, and nobody's taxes went up. I mean, talk about like bad marketing. It was really bad. So let's talk about what a marginal income tax rate is. Now, there's two things you need to know about taxes. There's the marginal rate and the effective rate. Now, we have a bunch of tax brackets. We have a progressive income tax. And the progressive part means that if you have more money, you pay more tax. Although that would be true even if we had a flat tax. A flat tax is where everybody pays the same rate. So if everybody had a 20% rate and you made $100,000 and I made $1 million, you would pay $20,000 and I would pay $200,000, so I'm still paying more than you. But what a progressive income tax does is that it takes people in the top brackets and makes them pay exponentially more. And I've been at parties with a bunch of people, and I look around the room and I'm like, I'm paying more taxes than everybody in the room put together. So that's a progressive income tax rate. So you have the marginal rate, which is the top rate that you pay. And then you have the effective rate, which is the blended rate. It's the average of all the marginal income tax brackets put together. And you care about both. You care what your marginal tax rate is, and you care what the effective rate is. So you should know these numbers. Now, how you figure out the effective rate is you just look at that line on your tax return that says total tax, and you divide by your adjusted gross income, and that tells you your effective rate. You should know this. You should know what your tax rate is. My guess is that you think your tax rate is higher than it actually is. You would probably be surprised at how low your taxes actually are. Just saying. Let's go through the tax brackets here, because I'm sure you've never looked up the tax brackets. And the numbers are pretty exact, but I'm going to go through just rounded versions. So from $0 to $19,000, you pay 10%. So if you make less than $19,000, then you pay 10%. But there's an asterisk on that. We'll talk about that in a second. And this is for married filing jointly. This is not individual. This is household. From $19,000 to $77,000, you pay 12%. So most people, given that the average income is about $45,000, $50,000, most people don't go any higher than 12%. That's the marginal rate. From $77,000 to $165,000 is 22%. Now that covers probably all but the top 5% of taxpayers, which means that everybody pays 22% or less. Now, Trump, before the crisis, was actually trying to lower the tax rate on this bracket to 15%, but that got thrown out the window. from 165,000 to 315,000, you pay 24%. This is still pretty low. I mean, we're talking about people who make $300,000 a year and they're paying 24% income taxes. It's still pretty low. Then it jumps up a little bit. From 315 to 400, you pay 32%. From 400 to 600, you pay 35%. And 600 up, you pay 37%, and it doesn't go any higher than that. The top tax rate that you can pay is 37%. Now, there's been all these discussions in politics about like 90% income taxes. I'm sure nobody minds if the government raises taxes on somebody else, but a 90% income tax rate gives people a strong incentive not to work and not to contribute. So that's all I'll say about that. So it's a marginal rate. So if you make $600,001, that $1 is taxed at 37%. If you make $77,400, that next dollar is taxed at 22%. This is not your effective rate. So let's say you made about $150,000. The first $19,000 are taxed at 10%. The next, from 19 to 77, are taxed at 12%. And about the next 80,000 are taxed at 22%. You probably have an effective tax rate of about 15%, which is not high. If you make $150,000 a year, a lot of people will consider that to be a lot of money, and your effective tax rate is only 15%. And keep in mind, this is before any credits. It's before any deductions. So a lot of people end up paying taxes that are much less than their effective rate. They end up paying much less in taxes. So your effective rate is all your tax rates averaged together. There's some economists out there right now, some far left economists, who are looking at effective tax rates and not marginal tax rates. It is marginal tax rates that determine behavior. I am taxed at 37%. That's my top marginal rate. In the 1970s, the late 70s under Jimmy Carter, the top rate was 70%, and that kicked in at about $700,000. On an inflation-adjusted basis, that would be about $2 million today. So imagine if we had a 70% tax rate on people making $2 million. Again, nobody really cares if you raise taxes on somebody else. So I had an economics professor in college who used to say all the time that if he was taxed at 70%, he would stay home. And it's a powerful incentive not to work. It's a powerful incentive to not to contribute. If you tax something, you get less of it. If you tax consumption, you get less of it. If you tax income, you get less of it. And I've never been able to understand why we would tax income and people would produce less. So if you tax income, you get less income, you get less work. By the way, we should tax consumption. Consumption is what we find offensive, not the income. It's how people consume. If somebody buys Lamborghini and they had to pay a 25% sales tax, I don't think anybody would have a problem with that. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.